Globetronics Technology Berhad was founded by Mr. 𝗦𝐼𝐾𝐿 in 1991. The company is in the outsourced semiconductor assembly testing industry, where they are principally involved in the assembly, packaging, and testing of semiconductor or electronic products. Some of the countries they sell to are Malaysia, which represents about 22.7% of their total revenue for financial year 2020, followed by Singapore, 71.6%, United States, 4.9%, and the remaining 0.8% comes from other countries. For more information, you can visit their website at www.globetronics.com.my. A sloppy and declining revenue and gross profit growth overall. The drop in revenue and gross profit is due to the slowdown in their sensor division, which represents more than 60% of their total business revenue, particularly in financial year 2016, where their existing proximity sensor volume for the smartphone was lower in consequence with the end customers working on redesigning and phasing in new technologies that will eventually replace the old proximity sensor completely. On the other hand, the US-China trade war had inflicted a heavy toll to most of the group's key customers, resulting in significant collateral damage to the group's businesses and financial results throughout the first half of financial year 2019. But thankfully was later offset in the second half as the pent-up demands overtake supply, thus triggering the business recovery for GTRONIC. The growth of operating profit was in parallel with the unstable gross profit, as they are tied up to their top line's performance. Nevertheless, GTRONIC has a growing profit margins overall. The only times where they incur drop in margins is in financial year 2015 to 16 and 19, as they experience lesser sales, gross and operating profit explained in the previous slide. ROIC was rising initially, but dropped after financial year 2015 due to lesser profit generated, but at least there's an improvement after that. Unstable profit after tax while remuneration is rising, which resulted their remuneration to PAT ratio to escalate from 14% to 20%. Very healthy cash to debt ratio. GTRONIC has been in a net cash for 10 years. Positive but bumpy operating cash flow, in line with their falling operating profit before working capital. High capex incurred in financial year 2017 in consequence with their business expansion for their new and existing division. GTRONIC paid dividends for 10 years. However, the amount was declining after financial year 2016. Negative free cash flow in financial year 2017 as a result of the high capex and lower operating cash flow explained earlier. They are able to distribute dividends during those stated years as they have ample of cash reserve. All in all, I rate their company 4.8 out of 8, which is about 71.25%, a great financial performance overall. After analysing GTRONIC's 10 years of financial data, here are my thoughts. Number 1, the company is largely dependent on two major customers, where they contributed more than 70% of their total revenue. That being said, their sales is highly associated to their major customers' demand for their services. This is justified in financial year 2019, where GTRONIC experienced a large fall in sales due to the phase-out of certain mature products of a Japanese customer. I suspect the Japanese customer is one of GTRONIC's major customers, thus you may want to find out who are they. Besides that, although GTRONIC's sales has been very sloppy and dropping over the years, but their profit margins were rising. This shows how capable their management is, as they focus on improving their costs and only expand in business segment that generates better yield. As the saying goes, less is more. Lastly, I feel that GTRONIC's valuation is very attractive in our local OSAT industry, given their low PE and relatively high ROIC as opposed to their competitors. But of course, it is best to compare with their direct competitors, who also assemble sensor, LED, as well as quartz crystal and timing devices to gauge their actual valuation. That's all for today's video. If you enjoyed the analysis, make sure you smash the like and subscribe button. If you have any questions, feel free to comment down below. I'll be happy to get back to you. With that, I'll see you in the next one.